Hey guys, this is Steven with Agrestic. Today I want to give a little preview of where I think we're going to be in the feeder cattle market over the next week or two. So what you're looking at here is a continuous feeder cattle contract. This is the second month from the front. So we're looking at GFJ, which is April. If you're looking at GF1 here, it would be March. So we got GF1, which is March. Once March expires, which will be today, I believe, this will then roll into April. So the GF1 becomes April, so GFJ, and then GF2, which is April today, rolls into May. So this is going to probably jump up here a little bit based on just the difference. So we're at 168 on May here, down on the forward curve. 162. So you're going to see a little bit of jump here, just naturally from the roll, because this isn't Panama adjusted or anything. So you can see a little jump for that reason. But nonetheless, where do we think price is going to go from here? Again, looking at the second month out, continuous contract. We can use some seasonals to help, but just real quick, just to introduce you to my chart here. This is on TradingView.com, and TradingView's got an outstanding charting package, several indicators, and just a great community of people that develop additional indicators. I've actually developed this indicator, and I call it the boss indicator, and then I plot some other indicators on the chart that help me analyze what I think is going to happen in the feeder cattle market. So I plot a 9-day moving average, which is this red line here, just the solid red line. I plot an 18-day moving average, which is the turquoise colored one. And then I plot a 9-week average. So this is a weekly average, and that's the hashed red line. And then I plot an 18-week average, which is the hatched turquoise line. Down here I have a slow stochastic plotted. I got a Williams percent R that I've changed and configured to a 30-day versus a 14. And then I plot a 2-day RSI, which is relative strength index. So those are three indicators that I really like to use, and that's kind of the foundation of this boss indicator. So what you're seeing in here is you're seeing some signals where I say buy policy, and what I'm referring to is really LRP, or potentially it could be LGM or even dairy revenue. But LRP, livestock risk protection, what we're looking for is to try to find the high in the market, right? You can see that there's plenty of errors plotted here, and it does a pretty good job of finding that high. But what I'd like to say is, like, the trend is your friend, right? So we want to try to ride this as much as we can. The first signal that I always use is this teal colored one, and I'm using this stochastics as a trigger. So whenever the indicator gets overbought, which is above 80 here, this will signal whenever the fast stochastic crosses slow, and that'll fire one of these teal deals. And it fires pretty frequently. There's not a shortcoming of signals here, so you're always going to have some time to buy LRP using this indicator. But again, we want to try to get the highest price out. So when this stochastic one fires, and these moving averages are moving up rapidly, and they're sloped greatly up, I like to continue to hold on to this. So I look for another day to buy. Now, what happens is you'll get a little reversal, right? And when that reverses, the market reverses and starts to sell back off, that's kind of when I would say it's a good time to get in. I've looked at this longer term, and usually it's when this Williams percent R dips down below minus 20. It's got a different overbought scale. Instead of being 80, it's minus 20 to the upside here on the high side, and it's minus 80 on the low side. This one's 20 down here and 80 up here. Nonetheless, when it dips below its overbought level 3 days in a row, that's usually a good trigger to get in. That market can continue to go down, and so I always like to use the momentum of the market. The trend is your friend, and then buy on that reversal here, which is this lighter colored turquoise color here. So where it says buy percent off. Okay, so you can see that hindsight's 2020. You don't know what's going to happen going forward here. And it did trade sideways, and it didn't necessarily go lower. It just traded sideways, and then we moved higher. So you could have very well got a better price, but look, we don't want to be naked, right? We want to have coverage for our livestock. That would have been a good place to get in. So enough of that. You see what I've got plotted here. I got the averages. I got the slow stochastic percent R and the RSI. Where do we think the price of feeder cattle is going to be in the next week? And just looking at the price chart here, this big down day here, where we got this signal here, that's the day that Russia invaded Ukraine. So we got a big movement to the downside, which was, from the low point, you got 167.72 here on this bar. And then the close of this one, it was 163.80. Now, LRP doesn't exactly correspond to a T to the futures markets, but it's very close. So, and nobody's going to buy an endorsement here on April at this point in time. 13 weeks, the shortest one you can buy. So we'll look a little bit farther out on some of these contracts. But I like to look at this continuous contract because you got a little bit more volume in these front months, and you just get the extended preview of where the market's been. But so, our averages have started to slip down. We've sold off. Seasonally, what does this look like? Let's go to the charts. I'm going to scroll up here to April because that's what we're looking at. And I've turned off the 5 and the 10-year pattern. So reduce the noise in this, and I get out here to where we're at today. Here we are, the 26th. So we get this little sell-off beginning in the 17th of February. Sells off to the 22nd, then it spikes a little bit, and then it sells off, and it'll sell off to about the 16th of March. We're right in here today. Here's the 27th, 28th on the April contract, and it just really pretty much goes sideways and then moves down a little bit. How big is this move in price? I can't really tell you because this is an indexed seasonal, but it's probably not a big move. So I wouldn't be overly concerned about this weakness into here. But there is some sideways action to some weakness seasonally in the April chart through the 16th. We come down here and we can look at the September, the August or the September. We'll turn this 10-year off. Certainly, just something to point out here is there's something going on here on the 5 and the 10-year where typically I like to look at the longer-term patterns, the 15 to 30 year, just to validate that seasonal. But the 10-year is getting out there pretty good. So this dark blue line's the 10-year. There's certainly something going on in the last 10 years that kind of causes this little paradigm shift in this seasonal pattern. So you're starting to see a little stronger prices earlier in the cycle for these deferred contracts. But let's stay with these longer-term patterns because as you get closer to expiration, they do tend to converge. But now we're here back at the 24th is here. We get up to the 28th. Here we are today on this August pattern. Maybe you get a little bit of a rise going into March the 4th, so this week, and then you get a pretty good little move to the downside. Now this is not a smaller move. You're going from 50 on the index down into 7 on March 16th. So that's a bigger move on the August contract. So, that's something to maybe be a little bit wary of. If you're naked now looking for coverage, or you got calves being born here, in the next week or two, and you need to get coverage on your cattle, I would certainly be looking to do that. Before you get. Before you get, you can wait and try to hit this upside, but you got to time it out with your marketing window, right? So you get some upside back here, but it takes a while to get back to where we are on the 4th of March here. So going in here to this week, really probably going to be your best opportunity just to get some good coverage. So let's look at the chart again. Some other things I want to point out, just looking at my indicators now, we are oversold. So that's a plus to the upside. We're oversold. The fast, which is this red line here on the slow stochastics, has crossed the turquoise. So we got a little potential momentum shift here. You got some divergence in this RSI. So that's something I always like to see where you have a lower low here. And then you get a low here, and then you get a lower low, but your indicator's low is higher than the previous low. So we call that some bullish divergence right in here. So from this low to this low, which typically means that there could be some reversal action in the market. So a couple good things going for us. You got some bullish divergence in the indicator. This bar here is almost a pin bar. A pin bar being where we've opened up middle market, we've sold off, we've went higher, and then we've come back and settled about even. That's not necessarily a pin bar. A pin bar, you'd like to see this up here in this range a little bit higher to the 80, almost 80% of this range here. But I mean, that's still a good little signal that it's moved lower and closed higher for the day. So again, that's kind of what's caused this divergence here. So potential for some upside in this market in the next few days because we are oversold. This big day that Russia attacked Ukraine, was a big gap day. So look for us to come fill this gap. The bottom of this bar is 167.72. We're at 162.07. So look for us to potentially fill this bar. If not, at least get, come touch this weekly 9-week moving average to get us back to about 167. But I'd be looking to fill this gap here at 167.72. And at that point in time, if you can get this covered this week in the next few days, this thing's probably going to sell off a little bit more just seasonally, as we've seen in our charts here. So that's my rundown here. Stephen from Majestic. Check us out. Check our website out. We do have some of these seasonals are offered for free. If you want to see the longer term patterns, we offer a subscription service for that. But come check us out and check out our boss indicator as well. If you need to give me a shout to get some more information on that, happy to have your call or text. Thank you guys. Bye.